The show. Hi there, Dipan. Good to have you on board. Let's start off by your assessment then as to how you've looked at the entire PSU space, the kind of rally that we've witnessed, in particular for the PSU banks. Do you believe that there is more merit in this move?
Good morning, and thank you for having me on your show. Yes, I think they are seeing a correction of underperformance of multi-decades coming through in the last 2-3 years or so. And in times like this, when a lot of businesses are trading at very high P multiples, a lot of professional fund managers and high net worth investors feel there is comfort in the PSU stocks where there is still reasonable valuations. And on the whole, I think the performance has been pretty decent across the board if you look at the PSU companies, perhaps with the exception of oil marketing companies, whether it's the engineering companies or the NBFCs or even the public sector banks, the defense companies, the shipbuilders. I think there's a new, I would say, resurgence of growth in all the PSU stocks, and that is capturing the attention and the, I would say, fancy of the investors as well. So maybe at corrections, if you get into PSU companies, it may still be a great trading opportunity. And valuations, as I see them, there's a good scope for still further re-rating of the P multiple, especially on the PSU bank side and the PSU NBFCs.
Sure. Dipan, aside of that, let's throw a focus on what's happening in the primary market, because just so much paper is hitting the bourses almost on a daily basis. And I was just looking at the subscription figures and the kind of gains some of the recent listings have made from the issue prices. They're looking pretty handsome. I mean, gone are the days of the class of 21, your Nykas, Paytms, which listed with a lot of exuberance, and then we all know what happened after. But that aside, any of the new paper that's interested you? I mean, I was just looking at Yatra, for instance. It's pretty much a subscribe across the board.
I think the entire structure of the primary market has changed, and therefore, from a high net worth investor's perspective, you hardly get any allocation in any of the new IPO listings. Secondly, every IPO, I really go look for only one data point, which is the price to earnings multiple at which they are offering. And I still feel that the valuations of all the primary market issuances is higher than a peer group company in the listed space. So broadly, I would like to avoid all these new IPOs and wait for a year, 2 years for the stock price to settle down. We would have 5-6 quarters of earnings, see how the company has performed post listing. There'll be some listing history as well, and then perhaps make a call. The only silver lining is that so many interesting companies, although expensive, are getting listed, and who knows, 2-3 years down the line, our choice of investee companies may only increase with the kind of interesting companies going public.
Right, stay on with us, Dipan. Just going to take a quick detour and connect with Kiran Mazumdar-Shaw, the Executive Chairperson at Biocon, as well as Peter Bains, who has been appointed as the Group CEO. Thanks so much for
takeaways from HDFC Bank. The fact that they're saying that they are expecting the NIMs to fall by 25 to 30 basis points. The NIM guidance, of course, factors in the excess liquidity. Wanted to understand whether you see the stock going to be sideways for some more time to come, and if you perceive as this consolidation in the stock price as a good time to buy for the long-term investors or add in more positions.
Yeah, I think first of all, a lot of investors already own HDFC Bank from whatever portfolios we are seeing, and therefore, in terms of risk profiling the portfolio, there's not much scope to add more HDFC Bank. And also another factor is that there is no really trigger coming in for the stock price to move up. Triggers could be in the form of significantly better performance, better than what the street is expecting, or some positive news flow. We can't say what that may be. Stock, I mean, all know has been, going sideways for a very long period of time, has in fact underperformed. Valuations also have come off historical levels and perhaps cheaper than some other peer group companies. So it's just a matter of time when the stock starts to do well. It's just that we don't know at which point of time the outperformance will start. All I can say is that HDFC Bank is a fabulous play on the Indian economy. The Indian economy per se is doing well. Stock market is doing well as well. So there's no way that HDFC Bank will remain a laggard for very long. I think that when we see solid FII flows coming into the country, that's when we see the likes of HDFC Bank do extremely well, because it's more of a liquid issue in terms of buyers and sellers in HDFC Bank rather than the actual fundamentals of the company.
All right, from HDFC Bank, let's put the spotlight on PSBs because those are on the editor's radar today. Discussing the fiery run-up in some of these stocks, the valuation picture and the key triggers, Nikunj, all critical.
Look, you have to look at banks. One side, you've got HDFC Bank, which is underperforming, and you've got this charged up move over a frenzied rally in some of the small PSU banks. I'm going to use the word small and PSUs here. PNB is not small, but it also has seen a fiery run-up. So let's focus on UCO Bank and Central Bank and some other banks from the small banking, from the small cap PSU banking space. You can throw in, let's say, Bank of Maharashtra. You can throw in a BOI. So there are a lot of banks which within the small PSU banking space have been on a tear. But why am I saying but? Now, on an average, these stocks have seen 12 to 15% move on Monday. Now, focus on the yellow column. This is the free float. To break it for our viewers, free float is the total share which is available in the market, which is held by minority shareholders and not by promoters, which can trade on a daily basis. Now, Central Bank on Monday traded 34 crore shares. That's 92% of the free float. For UCO Bank, the number is 86%. For Punjab and Sindh Bank, the number is 85%. Now, what is unique about this? Well, it is saying that almost the entire free float on intraday basis now seems to be trading. This could be intraday, this could be delivery, this could be new buyers getting in, old buyers getting out. But when we've seen this kind of a frenzy move in PSU banks and small tier PSU banks, let's say in 2022 or 2021, I'm afraid the end game has been very bad. Okay. So while the trajectory for banks, the sector, large cap PSU banks, cycle, capex, everything I think is looking fantastic. But the price action in some of the small tier PSU banks is something which you just need to be a bit careful of. I'm not saying it's a red light. I'm not saying the sector bull run is over. All I'm saying is that when you're buying some of these stocks only for price and momentum after the recent run up in these small PSU banks, you could ask yourself why, understand risks, and if you can manage risk, well, then might as well.
Okay, there you have it. The devil is in the detail, and that's one critical point that we're flagging off, Aisha, when it comes to the PSU banks.
Oh yeah, absolutely. Dipan, wanted to get your take in as well. Dichotomy between what the private banking lot is doing and PSBs. How are you approaching PSBs now? What's the call there?
See, per se, we are a bit cautious on the market and therefore, wouldn't advocate fresh purchases and perhaps any counter, including PSB stocks. And the dichotomy is nothing new. It has been around for decades and decades. And the reason for that is PSU banks have got into a muddle many times in the past. And their overall growth rates also are significantly lower. But I think in an oasis, they are an oasis of cheap valuation in a market where price to earnings multiple are extremely high. And investors, I think, have the comfort that next 2-3 years will be pretty decent for PSU banks. Because the NPA cycle should not worsen, and also these PSU banks are lending more and more to retail, which is much more safe. So from that point of view, there is a compelling story in PSU banks. It's just that we don't know when this NPA cycle will turn even on the retail side, and at that point of time, how these companies will actually manage those bad debts if at all. That's a bit of uncertainty, but that's I think somewhere in the future. In the meantime, as I said earlier, there is scope for the valuation ratios, the P multiple price to book to be re-rated upwards. And certainly there's a trading rally in PSU banks as well. I think every time the quarterly results will come, we will see positive surprises. So yes, the entire outlook looks positive, but our outlook on the market generally is slightly cautious. So one should keep that in mind as well.
Right. Okay, a lot of other stocks as well and strategy notes which have come out while we were away on a